So now we turn to Mr. Rose of Tennessee for 5 minutes.
Thank you, Chairman, and thank you to our witnesses for being here with us today. Dr. Michel, in recent years, we have seen many cases where the Fourth Amendment has been critical in protecting the rights of individuals. Cases like Carpenter versus the United States, which established that the government must obtain a warrant before obtaining cell phone location data, or Riley v. California, which held that the police must obtain a warrant before searching a suspect's cell phone. The law is developing in these areas to protect individuals' right to privacy, but it is still lagging behind in the financial sector. In particular, decisions in United States v. Miller and Maryland v. Smith gave us the third-party doctrine. Under that doctrine, if you voluntarily provide information to a third party, the Fourth Amendment does not preclude the government from accessing it without a warrant. Dr. Michel, can you explain how the third-party doctrine has impacted Americans' financial privacy?
Yes, they practically have none at the moment because of this, partly because of this. But I also want to clarify, because of something that was just said on the panel, the Fourth Amendment is, of course, that we're talking about is the one that amends the Constitution to the United States, which protects American citizens from the government. So, I mean, this is exactly the issue, and it was brought up in the cases in the 70s when the Bank Secrecy Act was challenged. If the Bank Secrecy Act were not there, the banks and financial institutions that we have would not be required by the government to collect the data that they are. That is a requirement in the Bank Secrecy Act. And that was always, you can go back, everybody can go back and look at those cases, that was always an issue as to whether this was constitutional and in violation of possibly the Fourth Amendment. So between the combination of the Bank Secrecy Act, the Fourth Amendment issues, and the third-party doctrine, Americans, although many of them don't realize it, have very little financial privacy at the moment.
How would the adoption of a CBDC further erode Americans' reasonable expectation of financial privacy?
I believe it would remove the last layer that we have, quite simply. Instead of having to go through the financial institution, the government would have that information either in a central database or a keystroke away.
And Dr. Michel, your organization recently released a survey that found that 68% of Americans would oppose a CBDC if it allowed the federal government to monitor their spending. Why would the government want to monitor the spending of its citizens?
There is no way to implement a CBDC and provide all the benefits that the advocates say, including monetary policy effects, without doing that. That is the absolute key there.
The survey also found that 74% of Americans would oppose adopting a CBDC if it meant that the government could use the CBDC to control how people spend their money. Why would the federal government want to control what its citizens spend money on?
That's a great question. So aside from any political aspirations, that is the monetary policy piece of this.
Would they perhaps want us to stop purchasing guns or maybe gas-powered vehicles or gas stoves?
Politically, it is a nightmare for either side. It could be used to stop labor unions. It could be used to stop people from spending things on gas stoves. It could be used under any political guise as desired.
Stop them from traveling to a protest or expressing their First Amendment rights.
Which we've already seen in other countries without the CBDC. So I think this exacerbates all those political problems. That's exactly what this does, and that's exactly why we shouldn't have one.
What does the FDIC's annual survey among unbanked, Dr. Michel, again you, among unbanked households tell us about the value that some Americans place on financial privacy?
It tells me that a lot of them do place a very high value on it, and one of the reasons that some people stay out of the banking system is precisely because of that issue.
Proponents of a CBDC also advocate for Fed accounts and postal banking, yet a 2021 postal banking pilot program that was given $6 million and had only 6 customers and generated less than $35 in revenue. Could you discuss why postal banking would be a bad idea for the U.S. economy?
Well, it's a bad idea for the same reasons that we've discussed with as general as CBDC or a digital dollar backed by the U.S. government. And it also highlights that the private sector in the United States actually does do a good job of providing financial services in general, broadly speaking.
Thank you. I yield back.